Kia ora, I'm Georgia Mills, Head of International Investment, NZTE, and it's a pleasure to be here today. I'm aware that we're standing between yourselves and afternoon tea, which some of you may be hoping includes wine and beer by now, but I can't promise that, but I can promise you three things. One, we won't mention the word geopolitical today, okay, gentlemen? We're going to make this super fast, free-flowing and informative. And thirdly, the probability of winning those flights is getting high, particularly if you remove the public servants from the room who will not be able to accept them. You could be in for a win. I'm just going to get some slides up on screen to just run through a few things. Are we allowed to accept them, Pete? Probably not. No. So there's three key messages we really want to impart today. How foreign investment is really important to our country and our growth, the connection that New Zealand and the US has with capital flows at the centre, and the opportunities that are on the horizon for New Zealand companies leveraging US capital. I'm going to set the scene on this capital relationship between the US and New Zealand, and then we're going to head to the seats for a fireside chat with Jonty Kelt, founder of US-based VC fund Fantail Ventures, and Guy Horrocks, man about town, well-known entrepreneur and investor who has built careers both on our shores in New Zealand and in the US. I've been told to point this at the back of the room. There we go. It was really fantastic to hear Prime Minister Luxon's address this morning and the focus on attraction of investment. I think we all know that New Zealand needs capital to grow. We are a net importing nation, and domestic investment alone will not help us boost our productivity or realise our potential as a nation. Whether it's an infrastructure, business or social outcomes, capital that is good for New Zealand has a role to play. Now, the US, as has been said already today, is New Zealand's second largest FDI contributor and has remained so for many years, currently contributing to 6.5% of total FDI stock in New Zealand, behind Australia. In the US, we have a team who is working on getting that number upwards, focused on attracting investment and the additionalities that come with it. We focus on three key areas of attracting FDI. One, supporting the establishment of multinationals in New Zealand and connecting global US investors with New Zealand greenfield opportunities. We support companies like Toby's, New Zealand growth companies, to prepare and connect with US capital. And we also are focused on attracting high net worth investors as part of the Active Investor Plus program, which incentivises investment into active asset classes. Underpinning this work is our responsibility to create a platform that establishes New Zealand as a great investment destination. As has been said many times today, it is the public servant's work to open the door for private sector partners and investors, and to support this we have a brand platform, Do Good, Do Well, which talks of value-based businesses, like our Prime Minister noted, and that innovative, sustainable and good for the world investment goes hand in hand with strong economic returns. I loved Tracy Hopapa's comment this morning, sustainability is the new lever for value, and that's something New Zealand can really play on. Right now, we are working with 47 growth companies seeking to raise capital from the US and 30 greenfield and scale-up opportunities. We are seeing some key emerging trends of alignment between US investors and New Zealand opportunities. For companies, this is very much showing up in clean tech, fintech, medtech, and future foods. And in greenfield, we think New Zealand has a really big opportunity to play in leveraging our renewable energy as an input for heavy industry. Hey, and maybe one day as an export revenue stream, we've got to hit Mr. McClay's target somehow. Biopharma, space, tech, centres of excellence, and nutraceuticals. Thankfully, all aligned with what John said from Sense Partners, so it's always a bit hairy when you get to the end of the day and you're going to be saying something super contradictory, but we all seem to be speaking from the same song sheet. It's also really important to remember that New Zealand is not a country that drives FDI through incentives or low tax. But that doesn't mean we can't attract great investment built on New Zealand's true competitive advantages. I want to tell you a story about one company, Cobb Ventures. Cobb is a business owned by huge multi-conglomerate Tyson Foods. Today, there are only 2 major broiler breeding companies in the world, both headquartered in the US. Previously, there was a 3rd competitor whose grandfather stock was wiped out by disease. Tyson Food quickly realised they needed to find a 2nd location for their chicken breeding, or they could end up in the same fate. They looked around the world and they found Australia and New Zealand, both surrounded by water and with the right animal disease-free status. We fought really hard for that business based on those 2 key factors, and were successful in Cobb establishing a $100 million investment in Huntly, a low economic region of New Zealand, now employing 120 people. A major US multinational now with a key presence in New Zealand, and more that we want to see. And on the company slide, we have amazing companies leveraging both really good domestic capital and US capital to take on the world. Now, to discuss these opportunities and challenges for these companies, I have Jonty and Guy with us, so I'm going to sit down with them now. We're going to talk through those challenges and opportunities. Jonty, Guy, thank you for being here with us.
Pleasure to be here.
Thanks for having us.
Cool. So we often talk about investors adding value beyond the capital. That's particularly what we look for at NZTE Investment. Jonty, can you talk about an example of a US investor who has brought these additionalities to a New Zealand company to help them scale?
Sure. So capital, external capital, is a necessary evil sometimes. Don't raise it if you don't need it, but that is sometimes needed. But aside from that, of course, there are additional benefits that an investor can bring. The 2 that I focus on are judgment, and that could be on matters of strategy or people or what to do next. Having smart people with different skills, different experiences around the table, because when an investor comes in, obviously they're typically getting a board seat or at least more involvement. That can be very valuable. And then last but not least is network. Introductions to other investors, people who can add value to the company, who have skills and experiences that you may not have. And so assembling a great board, typically who are investors in the company, is something that can really take the company to the next level. And in particular, the local knowledge of those people. If we're going into the US market, having a US investor that knows the local market is going to be very helpful, just network in particular and contacts. So one of the companies on the slide you just showed is Futureverse, which I'm involved with. They raised $50 million about a year ago. And I think that's a great example, a great New Zealand company, quite unknown and below the radar here in this market. They're in the digital asset space. They have received investment from 2 large US-based organizations. One's a professional investor called 10T, and the other is a digital assets company called Ripple. And the board that's been assembled there and their networks and their hooks into the global sort of markets that Futureverse is wanting to get involved with are really impressive, and that I think is a great example.
Cool, thanks. And Guy, what about you?
Yeah, just to add on to Jonty's advice, I actually got a lot of that advice from advisors as well. Jonty was an advisor to one of my old companies, so I got to learn...
You're welcome.
Yeah, I know. I got to learn some of the lessons. He didn't teach me all the lessons. I had to learn some myself, which were quite brutal, sadly. But he did teach me a lot, which was great. But I think of when I think of these US investors, the network's a huge part of it, especially with a lot of these companies that focused on go-to-market, like driving sales and marketing. And so if you get into if we look at New York as an example, Lera Hippo, one of the big consumer funds there, they're in 500 companies. You just get surrounded by these people that open doors, and it's hard to kind of really sort of stress how valuable that is. Similar, I was very lucky. My first investor was a guy called Gary Vaynerchuk, Gary V on social media, who's got a big network. And I think the first day I met him, he talked a big game. I was like, this guy's a huge ball of energy. And then I think at 3 a.m. in the morning, he introduced me to like the CMO of Salesforce, the CMO of Budweiser, CMO of Unilever. I was like, okay, this guy doesn't sleep.
Thank you very much, Gary.
Yeah, thanks, Gary. But yeah,
just noting the 3 a.m. I did say you're a man about time.
I know. Well, Gary was very helpful for me, so I was very lucky to learn a few things from him. But those kind of networks are very valuable. So yeah, it's just being part of their portfolios is a huge help.
Great. Touching on US investors, what do they really think of New Zealand?
I mean, it's a great place to visit. Great food, great holidays, great golf now. No, I mean, from an investment perspective, your greenfield strategy, I'm not so familiar with all of that. My life has been involved with startups and companies, right? And in that context, I don't think any investor's investing in a country, unless there's a particular thesis that's very aligned with the country. They're investing in founders and great companies. And so New Zealand has a evolving innovation ecosystem, and my background's in technology. I know there's a lot more to the economy and companies that are wanting to export from New Zealand and be invested in from US investors, but those companies are of high quality, and the question is, how do you get those in front of good investors from the US, because they will be pleased to meet them.
Great. So, Guy, leading on from that, common mistakes Kiwi businesses make when raising capital from the US, and on the positive note, what are some things Kiwi founders are doing really well?
I think it's kind of like a sales lesson. You hear this sort of comment that people say, you never show up and throw up, which is like this comment around showing up and throwing a demo straight up and selling to someone. You always want to sort of hear, qualify the prospect and build the relationship and sort of use that sort of insight about someone's business to sell. And it's actually a very similar process, sales to raising capital. And so I think a lot of people come in, they get that first intro and they go straight into pitching. And I think, at least from my own experience, it's been a lot better if you sort of build that relationship and trust, and then I think treat that investor like they're already an investor before they invest. And so like when I had with Carnival, I didn't know anyone. I got a lot of intros. I met a bunch of investors, had coffee, got them excited about what I was doing. I didn't show them a slide deck. I just talked about what we were doing. They're excited. And then for the next 2 months, I sent them updates every couple of weeks. So I sort of treated them, and it's a leap of faith investing in a company. And so you want to kind of, same as buying a new product, you want to de-risk that in their mind. And so if you can show that you're a reliable communicator and that you're showing momentum, you sort of build this sort of like, okay, it's de-risked in my mind, and there's a bit of FOMO at the end because you sort of build a bit of groundswell. So I think showing up and throwing up a slide, like it was the first time when I came with the NZTE delegation to Silicon Valley, and I didn't really know what I was doing, and we pitched 20 investors or 10 investors in a room, and it was sort of Dragon's Den, Shark Tank thing, and in hindsight I was like, we all learnt a lot from that, but like that's generally not how investors invest. So I think just building that relationship and trust and treating them with respect. I think it's both a positive and negative. Some Kiwi companies don't do that well, and I make an intro to, say, Google Ventures, and then I talk to them 3 months later, and they're like, I didn't follow up with them. And I'm like, geez, like you pull a favor, you've got to actually follow through and close that loop. And whether you raise from Google or not, they might make the intro that acquires your company or lands a sale deal. So I think that's kind of like something I always think of when I see Kiwi startups.
Yeah, we heard that this morning. Execution is key, and a US investor is going to expect to follow up within that 30 minutes or 45 minutes after the meeting. And on that, making sure, I guess, you're building those relationships really early before you need the cash. So not leaving it to the last minute so you don't have that chance to, and then you're out of runway. Jonty, any thoughts from you?
I think Kiwis have this humility, which I think everyone who meets them appreciates. They come across as earnest, honest, hardworking, but that is a feature, not a bug, until it stops them punching through and people understanding that A, they exist, and B, what they've got to offer. And I think, I've been helping Kiwi. I lived in New York for many years, and for maybe 15 years I've seen Kiwis coming off the plane and ready to tap into the massive wells of venture capital that exist in the US, and bright-eyed and bushy-tailed, and there's a bit of a rude awakening. The process is... Was I the rude awakening? Are you talking about me? You the bright-eyed, bushy-tailed one. You were the very bright-eyed, but the high talent, identified high talent early on, they, I think, are rudely awakened by how hard it is. I mean, it's a real process. The research you have to do to figure out who you should be talking to the process of getting a meeting, right? Realizing that cold calls don't work, don't bother with those, and that it's all about introductions, and there is a hierarchy of introductions and what's going to really get the person on the other side paying attention, through to the actual process and the building of the relationship and how fast you push and, how you tell your story. Realizing that the investor, at least initially, doesn't care what you've written down on a piece of paper or an Excel spreadsheet or on a slide. They're buying you. How are you going to land that message in the right way in 10 words initially? Maybe it builds out to 50 words. You've got to become very good at that to take them on the journey and make them want to learn more. Through to actually getting a deal done and the due diligence that's involved and having everything perfectly organised so that any question they ask, you've got the information. That builds a lot of confidence. This is a process which most people just do not understand. I didn't either when I started with it. And you have to, and so Kiwis are good learners as well. I think once they are shown that, they're going to be fast learners. And so that humility thing, again, I think it's a feature, not a bug, but being more aggressive and more assertive and being able to be proud of and cut through with your story is the thing that I think they're getting better at. My, very subjective sort of viewpoint there, getting better at, but you can never be too good at that.
And I think to add to that, you want to tread that fine line as a Kiwi of being possibly the most arrogant Kiwi and the most humble American. If that doesn't offend too many people.
How big's that gap?
It probably offends a whole bunch of Americans. But I love living in America. We actually would have stayed over there longer had it not been for COVID. But I think a lot of people, clients, when you pitch big companies and stuff, they'd be like, "Oh, don't be so humble, don't see," and then you come back and your friends are like, "Oh, geez, you need to be more humble." So you're not pleasing anyone.
Fantastic. Hey, and for those investor connections, you come to NZTE Investment and we'll help you out with those. So look, how do we get US VCs to invest more in New Zealand companies or into more New Zealand companies, and what are the barriers preventing them investing at this point in time?
Well, I do think New Zealand government has a role to play, and I think NZTE and Kia and other initiatives are helpful. But one thing you learn as an entrepreneur is that no one's going to save you. There's this thing called hustle, and if you've got a story to tell, it's up to you to get it in front of the right people. And that message needs to land with anyone who wants to do this, and they need to take that very seriously and be ready to devote countless energy, hours, time, and punches in the face from the people you're telling the story to, metaphorically speaking. And so, as I said earlier, right, investors are interested in great founders and great companies. And so hustling to get your company in front of others, and if an organisation like NZTE and NZ Government and Kia and others can help with that, well, that's of course going to be great. If I was an entrepreneur raising money in the US this year and NZTE organised me a roadshow with, the top 50 best VC partners within each of the firms across America, that would be fantastic. But of course, that's just not how it works, right? These people are very busy, and it's a hustle to get in front of the right people. But that's the game.
And I would say that hustle, so two of the logos that are up before, I'm sort of helping. One's called Tracksuit. Those two founders, Connor has lived in New York, moved back here, started the company, and I remember sitting down with him and he's like, it's going really well. They bootstrapped their first $3 million with, no investment at all, and in the first year, and then raised some money, and I was like, you got to get to market. If your market's the US, don't be sitting on a couch in New Zealand, you should be in market. And so Connor, he's a go-getter. He was like, cool, took his family, he's got young kids, straight back to US, the last 3 months, and they've tripled sales in 10 months, which is amazing. They've got people clambering over them, US investors trying to invest in their company. So that's a real sort of symbol of good product market fit and hustle, which is really good. But yeah, I think in terms of some of those US investors investing, a couple of pitfalls that even a company like them had or we had early on, they tried to raise when they were doing quite well, and the US investors were like, well, you've got a bunch of New Zealand customers, I've never heard of these logos, you've got no one to market. Those are actual things that do prevent some of the investment. Now they've grown really fast, they've gone back to the same investors, and they're like, oh, now you're too big to invest. Only 10 months later, which is remarkable. There's not many stories like that. But it is an interesting one where now they've got those US logos, they've got a bunch of lead US investors who are coming on board, and they've got Blackbird and Shasta Ventures out of the West Coast, Rob Coneybear, who's a great US investor who's coming down here a lot. So it is interesting. I think there's some pitfalls there that, having US logos, having a commitment to be in market is really important and de-risks it a bit. But I also think, there are some other things that the government could do probably to improve or at least sort of make it a little bit, de-risk some of the sort of stigma around investing in a foreign country that they don't know what the regulations are.
Probably no one left here to lobby, Guy, but maybe another day.
I'll keep lobbying all day long. Yeah, no. FAF scheme is a good example. Like, I'm an investor in 20 US companies. I've now relocated to New Zealand, and I have to pay basically a phantom, 5% dividend each year. I have to pay tax on that. Those things do actually matter for US investors. I've talked to a lot, like Rob Coneybear is a good example. He's like, I would potentially move here, but that's a barrier to him moving because he's paying, tax on things that aren't even a capital gain yet. They might zero out. So there's things like that. But even just, we raised money from Google, and we were the first Kiwi company to raise money from Google in 2013, and they said yes. And then they said, in actual fact, we can't invest in a New Zealand company. And so we had to flip us to a US parent company. So it's just, there's lots of barriers and a little bit of education probably for some of those US investors.
Cool. And we all know it's a really tough time for founders to raise at the moment. Investors are making less and less investors and kind of just following their own money. Is there an optimistic horizon for New Zealand companies? Do you think we'll see change soon?
I mean, the macroeconomic environment is terrible right now for raising venture capital. The best companies will always be able to raise, but if you're not the best companies, you're going to be having a really tough time right now. That's simply a function of the interest rate cycle, the fastest ever global Western economy central bank WhatsApp group facilitated interest rate rise cycle in history, 22x in 18 months. I'm pretty sure all these people all, are on a WhatsApp group together, and it's probably going to go the other way. Well, they always overshoot on their cycles. But anyway, that is a big impact on raising capital because the cost of capital has gone up, and and people are nervous. They are on their heels. Deals slow down. It's just tough. So hopefully, 24 sees a normalization of that. But otherwise, it's just basically the same as what my other comments were, which is you've got to get out there and hustle and build those relationships and get really good at all of the steps of building confidence with investors and ultimately closing the deal. And it's going to take a lot of no's, probably.
Yeah, and I think that hustle element, I'd say there's never been more dry powder of investors having funds to deploy and not deploying them, which is quite a crazy sort of element considering they're getting paid a pretty good management fee to sit on a bunch of cash. But, to your point, we're seeing a lot of that where there's still a lot of early stage investment, which is good. And Icehouse, Outset Ventures who are here are huge elements in the New Zealand ecosystem, really propping up that early stage investment and really, really developing that whole ecosystem is amazing. But I think once you get to that Series A, Series B, there's a lot more scrutiny and you see people, it's sort of like everyone's going after the hot company. There's a lot of the hot ones are raising lots of money, and then everyone beneath that are struggling a little bit. But I'm optimistic. I think it's one of the best times to start a company. Whenever there's trouble in the market, the birth of AI and some of these things, there's very exciting things at play. So I'm very bullish if you want to start a company, but as you scale, it is hard if you're not hitting your numbers.
Great. So we're going to take a question from the floor now. How did you let go of the fear of taking external investment? Guy, we might go to you on this one.
It's weird because I think New Zealanders sometimes do have a fear and they're very careful with their cap table. And when I came back, I couldn't believe there were startups here that didn't even have employee stock option pools, which seemed crazy. You know, like we usually compare it to Facebook and Google, and the person that painted the mural in the kitchen is a millionaire, and you know the cleaners have stock, and that's just how it works. You know, it's very standardized the way that people get stock options. So it is a little bit different here. But I love it here. I think there's a lot of opportunity, and I actually think New Zealand's headed in the right track in terms of what I've seen since being away and coming back. So there is a lot of there's a lot of good things happening, but some of it needs to be happening faster, I think. And so like that's just one example. But if you want to say.
I think success breeds success, and the New Zealand technology ecosystem was a great white hope up until about Xero, when Xero provided some returns to investors who had been patiently investing for about 20 years. But since then, there's been a number of successes, and those founders have got capital to reinvest into the ecosystem. The employees of those companies have got the confidence and maybe some capital to go out and start companies. There's a lot of people returning from careers overseas in the technology industry and other industries. The distance between here and Silicon Valley or New York is a lot closer, not in geographic distance, but culturally and spiritually and information-wise. Those things make a huge difference to creating sort of a positive flywheel, and I think there's a version of that happening here at the moment.
And if I say one other example that I think is a great symbol of that, if you look at Rocket Lab, the fact that they listed it, IPO'd, and there was 100 people that stock options were worth over $1 million, like that's a great success story. We've seen a lot of companies exit at 100 mil, and the founders get a lot of money out, and the employees don't make much. So I think that's a great symbol as well, that there's a little bit of an Americanization, America being the kind of industry standard for startups. There's a little bit more of us getting closer to that model, which is, I think, is a good thing.
Fantastic. We're going to finish off with some quick fire questions for both of you. So I'll ask the question, then Jonty, you can go first, and then Guy. If you had $10 million to invest in one New Zealand company today, what would it be? Quick fire. I said quick fire.
Well, I love all my children equally, but there are some favourites. I'll mention one. It's Vivi, which is a digital assets collectibles marketplace, which has customers in about 120 countries and is going really well.
Remarkable company, and David, you just got Entrepreneur of the Year, and he deserved it. I'm going to pick two that I'm helping both companies. Tracksuit, which I think is the fastest growing software company in New Zealand. Connor and Matt are doing an amazing job. And they're taking on America and succeeding, which is awesome. And Halter, which is Fitbits for cows and managing cows on farms. I just think that is one of the coolest companies to come out of New Zealand. And it's valued at over 300 mil now. But I think Craig Piggott, who runs that, is an amazing entrepreneur, and that's the type of company that you want to see succeed on the global stage, because it sort of fits the New Zealand brand of agri-tech.
And supported by domestic and US capital.
Of course it is,
awesome. Yeah. What sector would you be founding a company in, and why?
So I'm very excited about the digital assets ecosystem. That is how value is natively stored and transferred using the internet. Apparently the internet's quite efficient and has disrupted many industries, but it hasn't really disrupted how value is transferred and stored.
Yeah, and I'm going to say the generic thing around AI, but I think the AI, when we think of AI, it's sort of it's not a winner takes all, but it's close to it. I think it's going to be very hard for a New Zealand company to come and compete with, say, OpenAI, but I think how AI applies to different verticals, I think it's very exciting, and I actually think that's an area that New Zealand's potentially behind in. I'm seeing my US startup friends adopting technologies a lot faster than what I'm seeing businesses and startups here, so I'm hoping we catch up a little bit on that.
Also what the Prime Minister mentioned this morning, so you're on the money. What investment did you miss out on that you wish you'd made?
Pinterest in about 2012, I think it was, the seed round, valued at $22 billion today. Damn.
There's a few. Locally, Dawn Aerospace, I just love what they're doing. And, I think in that sort of shadow of Rocket Lab, like they're doing an awesome job. And it's cool to see a Christchurch company where I'm from take on the aerospace industry. It seems almost unfathomable, but that's definitely one. There's a few in the States, but that's probably the one locally that I like.
Great. And cheeky final question. Who is the better New Zealand company, Air New Zealand or Fonterra?
Well, I have been helping Halter this morning, and they work on dairy farms. So my answer might have changed. I love dairy farms. They're so different. They're so different. That's a trap question. That's going to get us in trouble.
Okay, no problem.
Do you have an answer for that one, Jonty?
In New Zealand, if they, serve better wine.
I thought you were going to say if they bump up some of your, bookings or let you into the Corrie Club or,
Something like that.
Yeah.
Great. Thank you very much, both your time. 2 seconds to go. We've got a new word, I guess, is hustle, taken over swagger from what we've heard from today. So thank you both.
And save yourself.
Thank you very much.